Ashwath Ram, MD of Cummins India, now joining us. Mr. Ram, good morning. Thank you so much for your time. Very good set of numbers. And let's start straight away with the comforting commentary you've given to the street yesterday in con call. Why was this such a big, kind of disparity in, or was it a, perhaps the market read too much in your parent commentary about India, and then when you came out and clarified doubts, how are things looking right now?
Yeah, the public limited company, which is Cummins India Limited, is roughly about 30% of what Cummins does in India, and it deals with certain market segments in India. And we did see that there was a little bit of a slowdown, one because of the transition between CPCB 2 to CPCB 4, and also certain slowdown in some of the automotive markets which are not really connected with Cummins India. So the global commentary was more muted, looking at the overall presence of Cummins in India. When you look at the markets in which Cummins India serves, those actually are doing very well, and we continue with our guidance of doing better than 2x of the GDP. So roughly 12 to 14% kind of growth is what we are forecasting, and we are very confident we can do better than that.
Okay, let's talk about how the margin trajectory is looking, because while the overall growth, demand, etc., you've sounded off very well, it appears to be either capping of the markets at, because street believe that these are the peak margins you're operating at. Can you give some more color that will the margins sustain at these levels, or could they come under a bit of a pressure going forward?
So if you look at a 5-year trend of margins we have been significantly increasing year on year. And last year and part of this year, we have had the advantage of a perfect storm of good news. We've been able to increase prices, we've been able to cut costs, we've had commodities being favorable to us. So just a perfect storm of all good news. So we certainly do feel that we will not let it go back to the levels where it was 2 or 3 years ago. But to maintain it at this level is getting increasingly difficult, because these are margin levels which are 5 or 6% higher than what we have achieved historically as a company.
So that's the good, right? Let's, Mr. Ram, now try and understand what's the bad as well. Because you said that there can be some turbulence in the short term because of this transition period to CB 4 plus gen sets, right? Tell me what's the situation on ground right now? What's the demand growth outlook for the mid to long term?
Yeah, so let me first talk about the power generation business. In the power generation business, we've just went through the transition from CPCB 2 to CPCB 4 plus. Actually, that's very good news from a Cummins perspective, because it moves the product from what we consider a older technology, pure mechanical, commoditized kind of product, to a higher technology, best in class in the world, fully scope electronics with emissions kind of product. So increases the scope of what Cummins produces in terms of, it makes the pie bigger, and also helps us, because it's a higher technology product, to increase our share in the pie. Now, for the last full year, transition has been going on, and we were the first out of the gate, so we had all the advantages of better pricing, better share of the CPCB4 market, etc. Now, as all the players also introduce their products into the market, there is bound to be a greater level of competition. Also, we will get a better idea of the incremental prices that we have charged on the product. Are those sustainable, or do we need to fine tune those in certain product categories to be to remain competitive and continuing the growth cycle? So demand order book is incredibly strong right now. The inventories in the channel, because the entire CPCB2 inventory has been completely depleted, and the channel is now filling the CPCB4 inventory. At least the next couple of quarters look like all of that will stabilize. but competitive pressure is bound to increase, and then we will correct for that.
I ask because from what I understand is that 30 to 40% of your power gen sales were coming in from CPCB 4 plus in this particular quarter. So what you're saying is that you're not confident of an EBITDA margin increase when it comes to these particular gen sets, right?
Yeah, we have already captured a big chunk of the EBITDA margin increase in this transition. Now, as it moves completely to a CPCB 4 plus regime, it's the first time. So we are waiting and watching what our competitors doing, what is their positioning from a pricing perspective, and so it is likely that we may have to take some price corrections to be more competitive.
Mr. Ram, I want to understand a broader point. Last 3 years have been phenomenal for the company, both on the top line front as well as on your EBIT front, 20% plus kind of a CAGR. Do you have comfort in saying that probably the same momentum could be maintained from here on as well the next 3-4 years? Look comfortable in that range, if not the exact number.
Uh, We are very confident that we will be able to grow better than 2x of the GDP. The reason why we are so confident that Cummins India will continue to grow at least for the next decade or so is because it is very tightly connected with the growth of India. So if India by 2030 is going to become a $7 trillion economy, it needs to invest a couple of $1 trillion in infrastructure to get there. And everywhere where infrastructure is needed, Cummins products are used, whether it be in power generation, whether it be in construction, in marine, in defense, in mining. Every single place which is connected to the growth of the economy in terms of infrastructure, Cummins has a role to play. So we think that cycle will continue. India will continue to grow at least 6.5 to 7%, and we will continue to grow at a multiple of that.
Mr. Ram, I'm quite curious to know, is it life living out of a suitcase? I see in the backdrop that that's a hotel room that you're joining us from.
Because we gather that you are transitioning into a global role and probably you'll be part of those calls which India tracks very closely, like 2 days back.
Absolutely, yeah. Yeah, looking forward to play a greater part as part of the global supply chain to leverage India even more. And India is one of our top 3 hubs where products are produced. Products are produced in North America, a big chunk in China, and a big chunk in India. And India certainly has a cost advantage. And so now I get to wear different shoes where I can help and leverage India to do more for the globe.
Region are you heading to? North America or somewhere in the European continent?
Right now to North America, but
Okay.
we have customers in 148 countries and suppliers all around the world. So this is something you said it rightly. We live out of a suitcase most of the time.
Okay, good luck with that and have a good stint. And we'll speak with you once you head to the West as well.
Thank you. Lovely talking to all of you, and thank you for all the support.
Great, great chatting with you.